All right, we're a few days into the Versant Media spinoff from Comcast. This is VSNT, trading at $33.50 ish today, down from 47. So this thing is getting absolutely puked. 145 million shares. I've got it at about a 4.9 billion market cap. So this is just going to look at my like 5-year view. If you were just to play out the revenue declines, what would this business look like in a few years? So I've got it trading at, call it 3.7x EBITDA based on their 2026 guide midpoint, and call it 4.5 times free cash on 2026 guidance. Net debt to EBITDA is like 1.2x, so pretty low leverage. Okay, here's the scenario, right? They've given us some hints at 2025, 2026. 6% revenue decline this year, 5% revenue decline next year, translating into 10% drop in EBITDA and free cash. I don't know, call it 1.1 to 1.2 million, or 1.1 to 1.2 billion. Again, on a 4.9 billion market cap. So here's how I looked at it. Just to skate this thing out a couple years into the future, yeah, say what you will, it's a melting ice cube. I think it looks like a really interesting trade from 33 back to whatever, mid 40s maybe. I said, let's take a look at their 2020 performance, because this used to be a separate segment within Comcast until 2021. It's not totally clean, but it's a pretty fair look at the cable network business. So it was a 10.8 billion revenue business in 2020. And in 2026, it's going to be a 6.3 billion revenue company. So it's 4.5, maybe 4.6 billion of lost revenue from 2020 to 2026. During that same time, EBITDA fell from, and again, this is segment EBITDA to like a fully burdened corporate cost and incorporated EBITDA number, but 4.6 billion down to 1.925. Okay, again, not totally apples to apples, but pretty close. So they lost 2.4 of EBITDA during a period where revenue fell by 4.6 billion. So for every dollar of lost revenue, they lost 53 cents of EBITDA during that period. Probably too conservative, right? Because you've got corporate costs and stuff embedded in that now. So 53 cents. So if you were to just project forward the next few years, pick your poison, right? Whatever your targeted revenue declines are, I project it out at 5% revenue decline, but we could do it worse than that, right? Let's just call it down 10. So down 10 through 2030. So that gets me to an ending number of 4.1 billion of revenue. If I say that they'll lose 53 cents of EBITDA for every dollar of revenue lost, that translates into 784 million of EBITDA in 2030. That's horrendous, right? Compared to the 1.9 billion they're guiding to in 2026. But again, just bear with me for a second, right? So future state, we've lost, call it 20% a year of EBITDA. We lost 10% a year in revenue. No change in interest. CapEx, they still spend, we'll call it 1.1% of revenue. Taxes, 25%. So I get to future state free cash of 400 million-ish compared to 1.1 billion today. That's $2.81 a share. They'll have stockpiled some cash by then. Again, I'm completely ignoring capital allocation. Future state multiple, we'll call it 4x EBITDA. That's a little bit higher than where it's at today. Works out to a $3.1 billion enterprise value, 4.8 billion equity value, because at that point in time, they'll have stockpiled some cash. That price, or that target, right, works out to a $33 price per share. So roughly zero IRR. So the way that I'm thinking about this is today's price of $33.50 is effectively embedding 10% annual revenue declines through 2030 and EBITDA falling from 1.9 billion down to 784 million. So like 20% plus annual declines, and free cash falling from 1.2 down to 400 million. But they'll stockpile some cash along the way. So that's how I'm looking at it, right? For a zero IRR share price today, currently embedding I think, somewhere in this neighborhood of assumptions, if you will. So I think that's pretty draconian, even for a business that is in decline, and people will say it's a melting ice cube, and maybe it is, maybe it isn't, but shoot, at 4.9 billion market cap, they're going to have a lot of money to spend on stuff along the way. I mean, at least within the next 2 years, call it half of the current market cap available to deploy into other stuff. And most people will probably just look at that and say, well, they're going to do bad M&A, right? And just arbitrarily say that's going to be the case. And maybe it will, I don't know, but whatever. So this is just a look at some numbers that probably mean nothing, but I think at $33, $34, you're basically penciling in 10% revenue declines and 20+% EBITDA declines for the next, call it 5 years. So take that for what it's worth.